And here's a surprise. Intel jumping more than 7% today. Best day since November. Now up nearly 20% so far this year. Also above its 200-day moving average for the first time in the year. Dan, you see this as a positive sign, what, not only for Intel, but for the market more broadly?
Well, I mean, listen, when you see these sorts of rallies broadening out, we've been hearing a lot over the course of the last few months. It was kind of a junk rally, right? And so there was a lot of the names that were the hardest hit in 2021 and 2022 outperforming. And we definitely saw that in January. So here we are. We've been talking a lot about the concentration of some of these mega cap names in tech in particular as a flight to quality or stability while we had this little banking crisis. So when you get news like we had overnight, I know you guys covered it fantastically last night, this Micron report, and then you have a stock like Intel, which is somewhat correlated. Those charts, if you overlay them, they look very similar. Valuations are similar, much below their peers, much below a market multiple. And you see it above its 200-day moving average for the first time in a year and breaking out of a range that has been really solidly in for the last 6 to 9 months or so. That is showing some broadening out of the rally. And to me, it's not going to make me chase a name like this or chase semiconductors or the NASDAQ, but it's definitely worth noting, especially if you've been bearish, as I have, and you're starting to figure out how might you challenge that bearish thesis at this point in the year.
Courtney, what do you make of the moves in Intel and in GE, which is, I think, its highest in 4 years, maybe 5?
Mm-hmm. Yeah, and these are not names that I thought we'd be talking about right now, because you're seeing some of these like older school names coming back in. But I do agree. I like that you're seeing this broaden out the rally. These are not names that I would be jumping into right now. I think they still have a lot of issues. So when you look at Intel specifically, they are still going to have a lot of competitor concerns. They are still trying to bring a lot of their resources into the U.S., which is going to affect a lot of their capital when you look at them going forward. And I don't think that's gone away necessarily. So I'm not jumping into these, but I do think it's a good sign for the general economy.
Guy, talk to us about the first quarter. Yes, sir. Talk to us about the first quarter and what, if anything, it suggests for quarter number 2, quarter number 3, quarter number 4. It was a rally that felt to me concentrated in January and then sort of lost a lot of its bite.
It's coming back, though. I mean, Tim talks about
the
outperformance of the NASDAQ is something to keep in really top of mind, because as long as the NASDAQ gets going, it's going to be very hard for the broader market in the form of the S&P to do a back and fill to the downside. That's true. What do I make of it? I think people are just really looking at things and hoping that somehow magically the Fed can thread this needle, and in the back half of the year they'll be cutting rates, which historically has been a bullish thing. I think if they were to cut rates in the back half of this year, it would be for very bad reasons. And right before our very eyes, although the S&P held the 200-day moving average yet again, we're 75 handles higher. NASDAQ never broached the 200-day moving average on the downside. So market looks good technically. I just think the fundamentals are not in place for this kind of move.
We're showing a chart there, Tim, of a lot of the Dow laggards, and the Dow has been the laggard. Why?
Well, because the triple Qs have been outperforming, the NASDAQ 100 has been outperforming the market because the mega cap tech stocks, at least in March, were the defensive havens. I would say we actually had great breadth until Silicon Valley Bank. And if you actually look at industrials, they were outperforming. And I think you can make an argument that they will here. I'm going to make an argument that at least tactically, in a world where bear markets have many phases, I would just say I feel kind of glass half full and a glass half empty world that I think we live in. And I think tactically you're going to continue to see, as I say, as long as you see the Qs outperform the SPYs, you're going to see the market continue to go higher. And I think that's kind of what we have. If you look at, Intel to me is a broadening of the semiconductor space. And Intel, after underperforming semis for the last 9 months by 47%, outperformed by 17% the semis in March when the semis outperformed the S&P. So back to that, I think you're broadening the rally in the semiconductors. And I think a lot of this is also the geopolitics of what's going on. The U.S. CHIPS Act and all that we're reading about China and all the focus on Intel as being at least one of the saviors for this industry, for our country, that's playing into Intel's hands. It's playing into its hands in terms of allocation. It's playing in terms of they pulled back on the div. They reaffirmed $11 billion in revs. And I think actually the stock's got a lot of bad news priced into it.